nice it would be if in case we get to do things without doing any mistake. It's not quite possible. We are humans. We do mistakes. We do rectify. And that's the more important part, rectifying the mistakes. And if in case we have to do all the mistakes ourselves and rectify all the mistakes that we do, we would take too long to reach our destination. What if I tell you that the quickest way to do things right and not take too much time is to learn not just from our mistakes, but also from the mistakes of other people. Here's going to be a very interesting video on CA Foundation September 2025 examination, which was considered to be the most difficult paper, where a lot of them did a lot of errors. Your seniors, or maybe you, if in case you are unsuccessful. I'm sorry for it, but the fact has to be accepted. If in case we get to sit in the minds of the examiner or the evaluator and see why did they cut marks in the answer paper of a student, we can skip doing that mistakes in January 26, May 26 exam, or whenever you're writing your examination. So this is going to be a video wherein we'll discuss the examiner's comments, what the examiners told about the students who wrote the exam in September 2025. This is available for download in the ICAI website only. If in case you want this, do ask me. I can share the PDF of this to you people later. Let's begin. In September 25 paper, like every other paper, question number 1 was on true or false. Here's what the evaluators had to say about the true or false question. These questions required examinees to state whether the given statement were true or false with proper reasoning. Reasoning is quite important. You have to mention the reason. Just writing true, 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 false, false, false will not give you any marks. Few examinees were unable to give correct logical reasoning in 2 to 3 subparts. So students spent so much time in practicing the remaining 88 marks of the paper by writing all the questions, computing in calculator, drawing the table, all that ledger account, working out. We don't spend any time on practicing true or false. True or false is a very vital part of your syllabus. 12 marks, 6 questions every time. And it's not too difficult to guess also. If in case you can pick 10, 12 true or false questions in every chapter, you have 100 true or false compilation of yours. And if you practice them and go, there's a very good chance that 4 or 5 of that 6 will be something that you would have read in the past and then you tried. Practice not just reading whether it is true or false. Also spend a little time reading the reason why it is true or reason why it is false. A lot of them don't even write a reason when it is true. You'd have to write the reason, no? When you tell it's true, tell them why it's true. When you tell them false, tell them why it's false and also mention what is true or when it would have been true. Important, focus on true or false. Don't lose out on the easy 12 marks that you can score in the power play of your game, first few minutes of your examination. Then the 1B was a short notes question, which is again very lightly taken. You ignore the theory from chapter 1, chapter 2, and all the chapters initial part where there is theory, but questions come from that. Good, easy 4 to 10 marks come from that theory part. One question that was there was generally accepted measurement basis or valuation principles. Any item, in order to be recorded in books of accounts, it should be measured in terms of money. The way it's recorded in terms of money is you can do historical cost method, you can do present value, realizable value, replacement price. So small explanations are there for each of it. The money that you pay to buy is historical cost. The money that you get if you sell is realizable price. If you have to buy the same product, now what you would pay is current cost. And if in case you identify the future cash flows from that product and discount it to today's date, what you get is present value. So important, it's there in CA Inter also. One fine day when you come to Inter in chapter 2 framework, we'll be discussing the same thing. Then you would not want to be told, no, is this what you learned in foundation? Did you not read even this in foundation? No teacher likes to tell that to you in Inter. So please do this small parts which is there in chapter 1 and 2. They come for good 4 or 5 marks in the exam. Next part, 1C. The question required various transactions to be recorded in purchase book. Okay. What did the students do? They wrote it in purchase account. Wow, shabash. There is difference between purchase book and purchase account. Purchase book is a subsidiary book, a special journal prepared on instead of journals. That is at recording stage. Purchase account is a ledger account prepared at the classifying stage. In purchase book, you record only purchase transactions, which are credit and which are of goods. In purchase account, you write purchase of goods, but doesn't matter whether it is for cash or it is for credit. You write all purchases, cash purchases and credit purchases. So the order is first you prepare purchase book, then the total of purchase book is posted to purchase account. You cannot incorrectly prepare purchase account when purchase book is asked. A lot of them lost marks. Simple purchase book, sales return book, purchase return book, everything looks similar. Date, particulars, amount column. Before that, you'll have one column. What is that? Invoice number for purchase and sales. Credit note, debit note for sales return and purchase return. It's not rocket science. It's been asked consistently, constantly, almost every consecutive attempt. Go through this purchase book, sales book format. Remember to write only credit transaction and that too of goods only. Cash transactions are ignored from this. And GST adjustment also can come in this. Be aware of that. GST should be added, but before adding GST, first adjust discount. That's with regard to first question. Going to second question, which was the favorite bouncer of ICAI, what they give, depreciation question, big question with provision for depreciation and disposal. Under sum of your digits method, if you remember, was asked for 10 marks. Question required preparation of machinery account, preparation of provision for depreciation account, prepare of machinery disposal account, where the depreciation was required to be calculated on the basis of sum of your digits method. And what we do is, I don't know where to even get this idea from. We think what's important is SLM WDV. SLM WDV. Did ICAI tell that to you? I'll ask only SLM WDV. Methods of depreciation that is there in foundation paper is SLM, straight line method, original cost method, written down value method or diminishing balance method, sum of year digits method, production units method, machinery rate method, depletion method. Read all the 6 methods. Don't take anything lightly. Production units also, I hope I mentioned. Read all 6. Don't skip any. And do with provision, without provision. With the disposal, without a disposal. Change in useful life, change in method of depreciation, all of that. Please don't skip. It's not that difficult. It's doable. And in fact, it's not just important for your CA foundation. It's important for your CA inter also. When you come to CA inter, when you start accounting standard 10 PPE at inter, you need basics of foundation for depreciation. Skipping it is going to cost you high. Anyways, you learn in inter if you skipped in foundation. Either ways, read it for foundation exam only. And don't do this prediction analysis. Last time they asked depreciation with provision. So this time they will not ask provision with depreciation. What if ICAI thinks last time I have given, this student has not done. Let me test this time also. And this time also they give provision for depreciation. Last time you wrote the exam skipping provision. You failed. This time you will be like Barala, Bantu, Damar. Don't play that game. ICAI doesn't play mind games because it's not one person who's there. They just randomly make person who made the paper for September 25 is not the same person who will make the paper for Jan 26. So there is a probability that similar kind of question, similar kind of concept what was tested last time can also be tested this time. There is no prediction or pattern analysis that last time that test comes, so this time it will not come. Something if it has come last time, it's important because it has come last time, it can come this time. Something if it has not come last time, it's important because it did not come last time, it can come this time. All that I'm trying to tell you, the underlying statement is everything is important. There is nothing which is less important. There is nothing which is more important. What's in syllabus is important. Read that well. Come to 3. They have not given any comments on 2B and 3A. Maybe majority of them have got it right. That was the good area where you can hit that ball for a 6. So every paper will have these 2-3 questions which are easy to do. I'm not telling you the chapter name. I'm not telling you PRS is easy. PRS can be difficult in your attempt. I'm not telling you company accounts is difficult. In your attempt, company accounts question can be easy. So in the exam, there will be 2-3 questions which are plain those there to you. No ghee, no podi, no masale, no chutney. Plain those there. Finish it first. Identify that questions which doesn't have any tricky adjustment, which are easy. It will be there. Can't guess the chapter, but 2-3 questions will be very plain, very easy. Exactly like study material or RTP. Finish them first and then take these bouncers because you have a choice. 3B, the questions required calculating of goodwill at various dates passing the combined adjustment entry. There was various things. You would have to adjust all of it together, identify which partner's capital account should be debited by how much, which partner's capital account should be credited by how much. That was needed. Very interesting question. Discussion video is already there in the same YouTube channel where you're watching this. If you want, you can ask me in the comments. I'll give the discussion video of September 25 paper. You can see that there. What did people do wrong with this goodwill adjustment? Most examinees correctly calculated individual impact of admission retirement of partners. There was admission come retirement based question, but unable to give combined net effect. Oops. Because of admission, the incoming partner's capital account will be debited. Sacrificing capital partner's capital account will be credited. On retirement, retiring partner's capital account will be credited. The continuing partner's capital account will be debited. After you write credit, debit, credit, debit, credit, debit with amounts, you have to find the net impact and pass one journal entry for adjusting the entire goodwill. Individually, they've computed the amounts correctly. Net impact, students failed, and to pass that journal entry also, some of them failed. Practice that goodwill portion, very important. 4A, question required accounting treatment in the case of admission of a partner. You need to do the same old process, your favorite process, revaluation, partner's capital, adjustment to capital if any, and then balance sheet. But what happened in this question? Lot of them have prepared revaluation account. They prepared partner's capital account and balance sheet after admission. But the question had mentioned that they don't want you to change the value of assets. Whenever you do revaluation up or down, the assets value is changing, no? It's incorrect. How can you change the asset value? You should not change. They want to show the same values in the new balance sheet. Because they want to show the same value in the balance sheet after admission, what you are supposed to do was not revaluation. What you are supposed to do was memorandum revaluation account. What were you supposed to do? Memorandum revaluation. Whatever increase in the asset, increase in liability, decrease in asset or liability would have done. Close it by transferring that revaluation profit or loss to old partners in old profit sharing ratio. You are supposed to extend it further, calling it memorandum. Whatever was credited in revaluation will be debited. Whatever was debited in revaluation will be credited. And the new profit or loss, whatever will arise, it is reversal of the earlier profit or loss. That would be transferred to all the continuing partners in new profit sharing ratio. By doing this, the impact will come on P&L for reversal of revaluation profit or loss. And in the balance sheet, all assets and liabilities will continue to appear at the old balances, what was there in the balance sheet before admission. That was what was needed. Lot of them, instead of preparing memorandum revaluation, they all prepared revaluation. Okay. Some examiners did not transfer the loss on revaluation in new profit sharing ratio to give. These kids have done memorandum revaluation. In revaluation, you identified profit, which you transferred to partners' capital. In memorandum revaluation, you reverse that profit by booking loss to new partners in new profit sharing ratio. They wrote in memorandum revaluation, they forgot to write it in partners' capital. Very good observation. It can be you who might do this mistake. Don't do this. Balance sheet, also if you did not correct hidden goodwill. Hidden goodwill problem, at least practice one problem. People have failed to do hidden goodwill adjustment in this 4E. Next, 5C, 5A, 5B, good job. Your seniors have done well. Barring few examinees, meaning only few people have done it correct. Majority of the examinees could not pass correct journal entry for redemption of preference shares. Capital to shareholder first, then shareholder to bank. If there is any premium, write share capital, preference share capital debit, premium on redemption of preference shares account debit to preference shareholder, then preference shareholder to bank. That premium what is paid will be adjusted against P&L account balance, not security premium. If in case there is issue of any equity shares, issue of any debentures, sale of any assets to raise the money for redemption of preference shares, first pass those entries and then do redemption. At the end, identify on the whole is the capital of the company decreasing or not. If the capital is not decreasing because of redemption, because you had freshly issued enough number of shares, no need to create CRR. Otherwise, to the extent the capital is decreasing, nominal value of preference share capital decreasing, which is not compensated by fresh issue of shares, you have to create CRR. Many of them made mistakes with journal entries. And sale of investment, that is to be done before the redemption, that also they've not done. Many examinees could not arrive at the correct amount of CRR. You identify how much is preference share capital decreasing because of redemption. So much CRR you should create, unless otherwise it is compensated by fresh issue of equity shares. If it is compensated by fresh issue, no need to create CRR. Check how much is credits in share capital, how much is debit. See the net impact decrease and then identify. That's 5C. 6A. Many examinees were unable to calculate incorrect amount. I'm going to say they were unable to calculate correct amount. Sorry, there is an error in the examiner's comment also. Now it's correct. Many examinees were unable to calculate correct amount of allotment and final call. You need to do a working note. What lot of you do is you go with your second PUC and 12th standard, hey, 12th standard 98, 12th standard 100. Working notes are all for kids. I do direct journal entry. You might go wrong. Do a detailed working note. When there is pro rata, when there is calls in advance, calls in arrears, see how much applications were received, how many applications were accepted, how much is excess money, transfer to calls in advance, how much is carried in share allotment stage, how much is to be collected on allotment, how much is already there as advance, how much is the balance to be collected, all that. No, please do working note. Don't skip. You might think working note will take time. Not doing working note will take 3 months time. Doing working note will save 3 months time. If you have to compare 3 months with 2 minutes or 3 minutes of working note, what weighs more? 3 months is more important. I'm trying to tell you, if you skip working note, if you do wrong answer, if you fail, you would have to write comeback exam after 3 months. Instead, please do working note. You might think it will take extra time, but that working note time, whatever you spend, it will save when you write journal entries. When you write journal entry, all the numbers are already there. So you'll spend less time in computing the numbers. Please do that. Then share forfeiture balance. At the end, that paid up part should be credited to share forfeiture account. Arrears part will be debited to calls in arrears. Total called up will be credited to share capital, debited to share capital. And on reissue of forfeited shares, if there is profit, you need to identify that and then transfer to capital reserve. We've done a detailed discussion of this in our marathon revision video also, which is uploaded recently. You can watch that there in the company accounts portion. It's slightly tricky. Classification between profit on reissue and premium on reissue. Also, there's a beautiful discussion that we've done. If in case you guys don't get that, ask me in the comments and I'll share that part video to you people. Do this part clearly because multiple times and consecutively this question has come here with regard to forfeiture reissue pro rata. Don't skip this part. Majority of them have done error in computing capital reserve. Lastly, few examinees could not arrive at correct final figure of inventories. This stock reconciliation problem. Whatever that forward backward is there, no, if in case we're going forward, basically we need to compute the inventory also on the closing date. If we can do physical computation on the closing date, good. If we cannot do it on the closing date, we might do it on a later date or we might do it on an earlier date. Using that information of a later date, we need to come back to year end, or using the information of an earlier date, we should come forward to year end. When we do that, we adjust. Like if in case we are going forward, we did valuation of inventory on 25th March. We want to find on 31st March. From 25th to 31st, I add purchases, deduct sales. If in case I'm coming backward from 5th April to 31st March, I will deduct purchases, I will add sales. When I'm doing this, no, with regard to sales, we need to be careful. Firstly, we need to take sales. We should not take consignment sales. We should not take goods sent on return or approval in it. Eliminate that. And in the sales, we should remember that adjustment to inventory will happen at cost, not at selling price. So from the sales, we need to eliminate the profit margin to find cost of goods sold. Usually profit margin is same on everything. That is normal. Some abnormal sale transaction might be there. So sales should be first classified into abnormal, normal. On abnormal, different profit percentage are usually lost. Deduct that to find cost. On normal sales, deduct the normal profit percentage to find cost. Total cost is the cost of goods sold. If it is backward, you add. If it is if it is backward, you add. If it is forward, you deduct. Do this part neatly. And goods sent on return or approval, it is not sale. It is your inventory. You have given it to somebody. It will be there in their godown, but it belongs to you. It is there in their godown, but it belongs to you. Include it in your inventory. If it is not included on the date of physical counting, add. Got that? That's the adjustment that you should have been doing it for 6B. I hope you understood something from the mistakes that a lot of them did in September 25 exam. I don't want you to contribute to examiners comments that will be issued by the examiner for Jan 2026 attempt, because you are going to be that one student who's going to get the answers right, who's going to keep the examiner happy, who's going to get good marks on the answer script, who's going to keep himself or herself happy, as well as the teachers, parents, and everyone across happy. Wishing you all the success in the upcoming examinations of CA Foundations that you'll be writing, and we'll be waiting very eagerly to see you all and welcome you all to CA Intermediate Advanced Accounting. See you all in the next one. That's paper discussion video after the examination is over at 5 o'clock on that day. Till then, have a great time. Till then, also stay in the game. Yeah, bye.
Why is ICI not giving me the marks I deserve? Why is it that in spite of writing everything, I still have not scored what I expected to? Let's decode this today. I have with me September 25 law paper. And September 25, not for me. Please, this is going to help you not if you are a September 25 student, but also to all the future students also, because you are going to know here what ICI really expects from you. So I have the September 25 paper, and with me I have this document which is called the examiner's comments on the performance of the examinees. That means they have given an opinion that what's lacking in the answers when they were checking the answers. So let's get into this. So the first question that they have talked about is question 1A and 1-2. Both of it they have talked. So let's discuss this. Mister, so I'm going to read out the question. I'm going to tell you what the answer is and what they were getting and what they expected. Mr. VG and Mr. PG were trading in unlisted shares for the last 7 years. They used to borrow funds from each other whenever required for any trade. Within a week's time, they used to refund the money to each other as per the circumstances of the case. They were following this practice for the last 5 years. On 25th Jan, Mr. PG wants to buy 20,000 shares of an unlisted company at rupees 500 each. But due to insufficiency of funds, he asked VG for 40 lakhs. VG transferred 40 lakhs to PG. After about 3 months, VG reminded that PG had not refunded 40 lakhs to him till then. He asked him to pay back his money. PG told him that he was trying very hard to sell the shares at a reasonable price of 10% more than the price at which he bought these shares, but was unable to do so due to market conditions. He asked VG to sell his shares on his behalf. To sell his shares on his behalf, that means he has appointed him as his agent and authorized him to appropriate the amount of loan of with interest out of the sale proceeds. That means agent has a interest in the property of agency because I'm going to sell that and recover my loan. That means I have an interest in the property. Mr. VG agreed to do so. After 15 days, where market conditions started recovering, PG denied and revoked the authorization by saying that he would sell the shares himself. He is trying to revoke, and interest in the property of agency is irrevocable agency. So, with reference to the provisions, whether the revocation of the agency was lawful. No, you cannot revoke. Let's see what examiners have to say. Most of the examinees could not answer correctly the provisions of section 202, which is they have to talk about irrevocable agency. That is when a agent has a personal interest in the property of the agency. Wherein an agency becomes irrevocable where the agent has himself an interest in the property which forms the subject matter of the agency. Though most of the examinees have written the conclusions correctly, guys, from this question itself, we can understand conceptually we are right, we are strong, but we don't know the writing part. And even if we write, we know the format, but we don't know what provision applies to this. This is where we are lacking. So please, when you are reading the question, try to analyze each line, try to find out how you got that answer, that conclusion. And on that, whatever basis you got that conclusion, that is your provision which you're supposed to write in your answer. Moving on to the next question. Messrs. GS Famous General Store in NK Market, Delhi got purchase order of 5 kgs Mamra Badam at 3400 per kgs from PK to deliver at his residence in Rohini. When the delivery boy of Messrs. GS Famous General Store reached at PK's residence, he found the door locked. When the delivery boy called him on mobile telephone, he told him to hand over the goods to his neighbor, Mr. Shah. He told him to hand over the goods to his neighbor, Mr. Shah. Now, when you are holding goods on behalf of someone else, it's bailment. Mrs. Shah was unaware of the fact that the Mamra Badam were not belonging to them, mixed the Mamra Badam with California almonds. When Mr. Sham, so this is bailment where mixing of goods is done. And is the mixing of goods done with the consent of the bailer? No. It is done without the consent of the bailer, correct? When Mr. Shah told that the Mamra Badam were belonging to Mr. PK, she again packed the 5 kgs Mamra Badam and delivered it to PK. This fact came to light when PK returned the product. When PK returned the product returned the packet to Messrs. GS famous general store by saying that it is not up to the quality and he refused to accept the packet. So this was mixing of goods and the goods are not separable. So you basically have to write here. So in above circumstances, what is the remedy available? So you have to write about mixing of goods. When the mixing of goods is done without the consent of the bailer has a right to get the goods separated, and any charges of separation shall be borne by the bailee. If the goods are not separable, he will get the reasonable price of the goods. Since the goods are not separable, he will get the reasonable price. That is whatever price he paid. Let's see here. Most of the examinees could not answer correctly by referring to the provisions of 157. 157 is mixing of goods. Some of the examinees resorted to answer the question in a generalized manner without substance and not in line. That means they have just written a general answer without specifically talking about the mixing of goods provision. So this was lacking in the answer. So they have basically on the basis of, whatever answers they have got, an averaging kind of a thing they have done. And on that, they have come up with these comments. So the next one is question number C. So let's go to question number C here. Question number C, it is about AB and C are partners in an unregistered firm named ABC and Associate. Is the suit maintainable in the following cases? And these were the three cases. So this is basically it's an unregistered firm. So disabilities of an unregistered firm. Now, what people would do, they will just write disabilities. No, you have to sync in line with this, whatever they are asking you. So let's see what the comments are. The examinees were asked to analyze whether the suit is maintainable. The question is based on the exceptions to the disabilities of an unregistered firm. Examinees were not familiar with the concept. That means when the firm is unregistered but still can file a case. So the most of the cases, the examinees knew what are the disabilities of an unregistered firm, but they were not able to answer what are not the disabilities. And the question was based on what are not the disabilities, because the first two question was about not disabilities of an unregistered firm, whereas people had answered as per the disabilities. Moving on to the second question, number 2B. What is 2B? Explain MOA and AOA. I also explain any three differences between MOA and AOA. Here, what they said was they were able to answer the MOA and AOA, but they were not able to give the differences, and the differences were very repetitive also. So see, majority of them were able to explain the MOA and AOA. However, they could not differentiate correctly between MOA and AOA. So the difference part they were not able to write. So though they could explain MOA and AOA properly, they were not able to write the difference part. Then question 3C. A, B, and C act as co-sureties for a loan of 4 lakh taken by R. There are there are three bonds specifying different liability limits for each surety, such as A's liability is limited to 1 lakh, B's to 2 lakh, C's to 4 lakh. Due to financial difficulties, R defaults on the loan and the bank seeks to recover the amount from the sureties. As per the provisions, analyze and determine the amount each has to pay. Let's see what they have written. Most of the examinees were not able to capture the provisions of section 146 and 147. That is, they wanted you to answer that unless otherwise agreed, they are equally liable to contribute. And if they are and second thing was that if they are bound by different sums, then they are liable to the contribute to the maximum amount of their liability. This was what they were asking. But I am pretty sure most of the students would have taken this as the ratio, and they would have done it in the ratio of 1 is to 2 is to 4. So they would have written about that each of the joint promisor is liable to, each of the co-surety is liable. So they would have written in a very generalized manner, but they would not have quoted 146 and 47, which says equally liable, and if there are different amounts, they are liable to their maximum amount. Some of the examinees made wrong calculations. So as I told you, they must have taken the ratio as 1 is to 2 is to 4. If you had done that, then it would be wrong calculation. Whereas this question was not about this. They said A will be liable maximum 1 lakh, B maximum 2 lakh, C maximum 4 lakh. That means the ratio is equal. So analyze and determine, and he had taken a loan of 4 lakh, right? So analyze and determine the amount each co-surety is liable to pay. So each of the co-surety, it is 4 lakh. equal matlab 1 point something it will come. But A is liable only for 1 lakh. So for A, 1 lakh. For B and C, what is 1 lakh? Matlab 3 lakh is left. That means 1,50,000, 1,50,000 each of them, B and C, will bear. But what the students might have done, they would have divided it in the ratio of 1:2. And in the second case, if the loan amount is 6 lakh instead of 4 lakh, then A would be liable for 1 lakh, B for 2 lakh, C for 4 lakh. 3 lakh, sorry, because 4 lakh is his maximum. 3 lakh is remaining. So they might have shown this calculation. They must have made a mistake doing it in the ratio of 1:2. The next question is 4C. Define law and explain various sources of law. The question uses the word explain the various sources of law. Examinees were answering in an expansive manner, whereas some are giving short answers. They were explaining you this, they asked you to explain the sources. You were supposed to explain it. Expansive manner means they were covering up everything without being very specific about the sources. And some of them did not even explain, they just gave the short answers. Most of the examinees resorted to provide their answers in a generalized manner while defining. Okay. In Indian regulatory framework, we have a very specific definition of law. So what they are saying is instead of giving the specific definition, the students gave the definition in a very general manner, matlab in their own language. So definitions cannot be written in your own language. It has to be as is given in the book. No. Next is the next question. 5A2. 5A2. Mr. S was going through severe financial hardship. His wife suggested to take a gold loan. On 15 Jan, he pledged his wife's jewelry worth 30 lakhs with one of his friends, Mr. R, and took a loan of 25 lakhs. On 17 Jan, he sold total jewelry for to Messrs. RL Jewelers, Pitampura. The jeweler purchased it in good faith without knowing the fact that the jewelry was already pledged. After all this, Mr. S declared himself insolvent. When R came to know about this, he filed a suit against Messrs. RL Jewelers, but Messrs. RL Jewelers contended that they were unaware about the pledge. With reference to the provisions, what is the remedial action available to Mr. R? Let's see what they are saying. Many of the examinees could not apply the provisions of Section 31 of the Sale of Goods Act, which is basically where a person has sold the goods but continues to be in possession of them. That is, sale by a person in possession after sale. They were not able to write about this, right? Even though, even though uh, here they have given this answer that when the goods are already sold to, even though it was pledged, the goods were already pledged. But if you still have the document, you can go and sell the goods and the sale is absolutely valid. So that is what they were looking for. If a person has pledged the goods, but this person still has the possession of the goods and pledges and sells it to someone else, the sale is valid. What they are saying is that most of the students could not even answer. So this is basically a locha to nemo dat quod non habit. No one could answer it in that specific manner. I mean, whatever the provision was, no one could answer that. 6A1. 6A1. 6A is generally negotiable instruments. 6A1. Mr. K draws a bill of exchange payable after 60 days after sight to Mr. J. Mr. J holds the bill for 30 days before presenting it to N, the drawee, for acceptance. Mr. N accepts the bill upon presentation. When does the maturity period of the bill commence? See here. Examinees could not cover section 61, wherein actually they did not pay attention to the after sight word. Right? The maturity period is calculated from the date of acceptance of the bill. The period of holding the bill by the payee does not affect the commencement of the maturity period. What most of the people would have done is that 60 days say, sorry, I'm so sorry. They would have written from the date the instrument is drawn, from that day 60 days. They would have done this. Whereas this was payable after sight. That means from the day it was drawn, first 30 days it was not presented. From the 30 days when it was presented, from that day we count 60 days. So in the answer, they might have written 60 days, the maturity will be 60 days from the day the instrument was drawn, whereas it was after sight. You missed this word, your entire answer was wrong. Most of the examinees could not answer this. Then the second one, a promissory note is made payable at a specific place on a fixed date. The holder presents the note for payment 2 days after the due date. Does the delay affect Mohan's right to recover the amount? It's given due to unforeseen. No, it will not affect. Under what circumstances can a delay be excused by law? So you have to give whenever in what case the delay can be excused. Now, this question has two parts. For both parts, the answer provided were not to the mark and in line with the expected legal position. The performance of most of the examinees was average as they lacked clarity of thought and understanding of the legal provision. That means what? Just a very generalized answer. You have to write here that the presentment must be done within the reasonable time, and if no time is given, and if it is not presented, and the reason or the reason for non-presentment can be excused if it is due to reasons beyond the control of the holder. So that is what they were looking. But in what the students had written was that they have just written a very basic without specifically talking about the relevant section. So there was no clarity in the answer. Then question 6b. Consent is said to be free when it is caused by fraud. According to the provisions, what do you mean by fraud? What would be the effect of fraud upon the validity, and state the instances in which the contract is not voidable. So basically, here you have to give all the 5 categories of fraud. Then you have to say what is the effect of fraud. It's voidable. If you cancel, you can claim the damages. If you accept it, you can ask to be put back to the position you were in before the contract was made. What are the 2 cases where the contract is valid? If one party used fraud but the other was not misled, or the other could have found it by diligence. In both of these cases, the contract is valid. Now, the question has 2 parts to be answered by an examinee. Though the answer to the first part, explain the meaning of fraud, was reasonable, nevertheless, the answer to the second part, that is the effect of validity and when it is not voidable, was found lacking in line with the provisions of the Act. Most of the examinees could not explicitly answer this question and gave a haphazard. That means they wrote the answer, but it was not clear. They could not really express it clearly. Guys, one thing is very clear. We might know the answer, but still we might not be able to give the correct answers. Unless you practice writing, you will not be able to write. You'll not be able to identify. Solving questions, writing answers is very important. The next one. What is the meaning of the term quantum merit? Explain any 4 cases in which a claim for quantum merit can rise. So when the contract is not separable, no claim, but if it is accepted, claim can be made. If it is separable, if it subsequently becomes void, or if a person has done the work but not as was required, and he must get a reasonable charge. So what they are saying is that they could not explain the meaning only, and most of them they gave in a generalized manner, and they also couldn't explain the 4 cases where the claim for quantum merit could be made. So the answer was again lacking. So basically, one thing is clear: provisions, it's lacking because you're not able to write the correct provisions. Direct answer, it's lacking because you are just quoting, you're not quoting, you're just writing in your way, not quoting what is given in the act. The last one, contract of sale resembles with a hire purchase. However, sale is distinguished from hire purchase. Explain hire purchase agreement and state any 5 differences. So they say when it comes to explanation, the explanations were correct. Explaining it was correct, but some of the examinees could not give the distinction clearly. They just wrote again lack of knowledge. That means it's not well read. The most of the answers revealed that lack of knowledge. That means what? You have not well read your answers. That was lacking. So I hope you will help. This video helps you. You are able to understand and figure out what mistakes could be made and you avoid that in the exams. I hope your studies are going well. Happy learning and stay motivated. Thank you so much.